Okay, welcome everybody. Thank you for joining us. I'm Barry Horvath with the Mortgage Firm and Dynamic Title, and we appreciate you joining us. We are going to have some information today on what's going on in the flood world. We live in Florida, and of course, we are on a peninsula. If you haven't figured out, there are some major changes going on. What's going on with the flood zone. So we are honored and privileged that Carolyn Hersh of Hersh Insurance is going to be giving us that update of what's going on. And I encourage you to share this with your real estate professional partners out there so we can spread the word about what's going on. So without further ado, I'm going to introduce Carolyn Hersh of Hersh Insurance. Appreciate you joining us today.
Sure.
So Carolyn, we are going to turn it over to you.
Okay, I appreciate that very much. Again, I am Carolyn Hersh. I have been an agency owner for 19 years, licensed in the state of Florida for 31. So I'm not exactly a new kid on the block, but I do stay relevant and stay up to date, and I'm very involved in my agency so that when things like this come out, I am prepared and ready to teach not only my clients, my staff, and you guys to be better prepared for what's going on in the marketplace. So I am going to go ahead and share my screen, and just give me 1 second here. And we will get rocking and rolling about what's going on with risk rating 2.0 with flood insurance. So
if you guys have questions, we'll save them for the very end.
Yeah.
And so she can get through this.
That would be great. So, all right, 1 second here. All right, can everybody see my blue screen there? Okay, great. Okay, so I want to talk a little bit about what's going on. So flood insurance, as we've known it, really has gone away effective. I think I'm going to get these dates a little bit wrong. April of last year for new business, October of 2021 for renewals. So what's happening is we are now using longitude and latitude from an insurance quoting standpoint. Previously, you guys were used to the question, is it in a flood zone or is it not? It's an A zone, it's a V zone, it's an X zone. We in the insurance industry are no longer going to be using those words in our verbiage. We are not going to be able to just say, okay, it's a house built in 1982 and it's, in Viva Villas, this is what a price is going to be. It's going to be done specifically on longitude and latitudes. First thing I want to do, though, as we're talking about this, is I want to really explain to you guys what a flood is and what a flood isn't. So what is considered a flood when we're talking about insurance coverage? A flood has to occur on 2 acres of property or 2 or more properties. So obviously we know it as, rising water and so forth, but it can't just happen to one property if that property is on less than 2 acres. So that's what a flood is. A flood is not the backup of sewer or drains, your pool overflowing, or water damage from within the house. So if you have a street flood, let's just say, and all it did was back up your sewer and drains and not other people's, that is not going to be considered a flood. That would be looked at under your regular homeowner's policy. Same instance, if you have a pool overflow and it does not drain into your drains and it overflows into your house, that is also not covered by a flood insurance policy. You'd have to look for possible coverage under your homeowners. And your water damage from within the house, whether it's your washing machine, your dishwasher, things like that, that is an everyday water damage claim that is covered under your homeowners. So that would not require, none of those 3 instances would require a separate flood insurance policy. So just to kind of consider, I usually tell my clients it's Noah and the animals 2 by 2. And if there's, multiple people on the street that are flooded, that's going to be when you're going to have your flood coverage. Okay, so why did FEMA, the National Flood Insurance Program, the federal government, decide that they needed to update the rating methodology? Nothing has changed of any significance in flood rating since the 1970s. So with things like the word, I don't know, what's the word, climate change and some of those other words that are out there, it was really time to do a major overhaul so that flood rates are fair to people, So in the olden days, which was prior to last year, in the olden days, if you were in that proverbial A or AE zone and you were, let's say, down in a flood zone, let's just say on the east side of 19 in Holiday or Newport Richey, you were going to be paying the same thing as somebody who was in an AE zone that's in Viva Villas on the west side of 19 in Hudson, even though the Viva Villas properties are approximately, they're much closer to the tidal water than somebody on the east side of 19 down in Holiday. So it was becoming extraordinarily unfair to people who are a little bit more inland. And while there are lakes and other low-lying areas, generally we're going to think of flooding as going to be usually tidal related, but that's not the case in all the things. So what they were trying to do is people that were inland, for lack of a better word, that were in those higher risk zones were paying basically the exact same thing as people who were on the west side of 19 that were in a higher risk flood zone. So the theory is if we get rid of what is an AE zone and we're doing longitude and latitude, and we look at 100-year floodplains, 1,000-year floodplains, et cetera, it's going to even out to where the people that are inland that may still have a higher than average risk for flooding are going to be paying less than the people who have a higher than probable average, i.e. let's go back to the no-name storm in 1993. So that's the reason they needed to do this. It was becoming really cost prohibitive for people who only buy, a city block were in a flood zone, but were paying $2,500 a year. And the people that were a block away from the Gulf or the Bay were paying the exact same premium. So that was the reason they wanted to go ahead and really overhaul the entire flood system. So this is the, I say risk rating. So will risk rating 2.0 change the mandatory requirements for the lenders? That is not a Carolyn Hersh question. That is a DeLynn and the mortgage firm question. You guys know, none of you guys are probably brand spanking new at this, but at the end of the day, the lenders are the boss of closing. If they want there to be a flood insurance policy, they get to declare whether or not there's a flood insurance policy in force. Shortly, we are not going to have flood zone determinations anymore. Right now, as best as I know it, is if we ran a flood zone determination and it said it was in an X zone, you guys could present it to your lenders for them to review in their compliance department, and maybe your buyers would win or maybe your buyers would not. So I can't tell you what will change for mandatory requirements for lenders. I believe, and I'll talk to DeLynn later on at the end of this about anything that she's seen on the back end, but there really is not going to be, as far as we know, a change for us, for you guys, for what's going to be required or not. For us as the insurance people, it's going to be what the premiums are going to cost you. Now, on a positive note, 96% of the people in Florida, I can't speak for the rest of the US, 96% of the people in Florida are going to experience a rate decrease to their premiums. Those that are in the 4% are probably going to experience some significant increases. So again, I can't answer that the mandatory requirements for lenders are going to change or not. They want a flood insurance policy, they're going to get one. Whether it's going to be a $400 or $4,000 premium, that's my problem. Okay. So how will elevation certificates factor into risk rating 2.0? I never, ever, ever, ever am going to require a flood insurance elevation certificate ever again to rate a policy. It used to be this word called pre-firm and post-firm. In most of Pasco County, 1982 was the year that if a house was built before 1982, anywhere in Pasco County, or Pinellas also, I pretty well Tampa Bay market, I could rate a house all day long without an elevation certificate. Then in 1983, there was a thing with what's called post-firm, that you guys were calling me asking for a quote for a house built in 1992 in a particular flood zone. And we were it was statistically impossible for us to quote it. It was, we had to have an elevation certificate because, 3 inches higher here, the machinery, and so the equipment for the house were going to be at different things. So prior to, again, this past year, we absolutely could not, under any circumstances, quote a house built after 1983 in this area without an elevation certificate. Now, I'll still look at your elevation certificates, because obviously if you are built up on piers and posts, you're going to be a fool not to have one, but it is not required anymore. In our agency, specifically to us, we will never present an elevation certificate if it's going to be to your detriment. And there are some elevation certificates out there for houses that were built a little bit out of compliance, or that maybe enclose something downstairs that really factor into some negative premiums. So from our standpoint, we don't need to see another elevation certificate again. Obviously, if your seller has one, present it to us and we can take a look into it. But again, going back into the longitude and latitude, they say that they are going to be able to do really decent quotes without elevation certificates. So just take that into consideration. Again, looking at your risk, that if it's built in, most of the houses that are going to be inland are built into compliance with the building codes of whatever year they were built. Elevation certificates, on the west side of 19, where they're built up on piers, posts, and pilings, obviously would still benefit, because otherwise they are going to be rated at base flood, which would become, again, cost prohibitive without one. So those have gone away. Just said that. Okay, still be required. No, I don't ever need to see one again. If you happen to have one, I'm happy to look at it, but it's not going to be required anymore. So how will risk rating 2.0 affect new policyholders with single family homes? This goes back to what I said a minute ago with, you're a new policyholder. You are buying a house in, let's go over down, I'm trying to think right now. There are some houses in, let's say, the River Ridge area. There is some flooding, some flood zones that are down in the River Ridge area. So you're a new policyholder with a single family home. Your seller might be sitting on a policy that their lender required that could be, $2,800, $2,900. I could be quoting it as a new policyholder to me, and it could come in at $800. Same house, same risk, same everything, but it's now more fair to the person who's inland than it is to the person who's on the coast. Now, let me back up and then I'm going to circle back to this again. So for people who are not selling but live in what has previously been an AAE flood zone, there's going to be a reduction in your premium that's going to hit instantly. And I'm going to circle back to that in a minute. If you are sitting in what we like to have called an X zone, and now your premium is going to go up, there's going to be a glide path for increasing your premiums over the next few years. So the benefit is, if you're inland and you've been in an A or AE zone, you are going to have likely a reduction in your premium. If you're on the higher risk zones, then you are going to have a glide path to an increased premium. So the benefit is going to be for most of the people that are sitting in the interior perimeter of the state of Florida, that's going to be the 96% that I said a minute ago that are going to have favorable rates on their flood insurance renewals or new business. Then the people that are sitting on the coastline, especially those people that are sitting on the ground level still, a lot of those, I'm going to go down 19 to Marine Parkway, Florimar, those neighborhoods I'm talking about. Those guys are going to be negatively affected over the next coming years with what their flood rates are going to be. And to be completely honest with you, it makes sense. So I'm not going to say that doesn't make sense, that those guys should be paying a little bit more for the cost of living on the canals and so forth. So this is going to be an interesting change here. So what's happening to the National Flood Insurance Program preferred risk policy, formerly known as an X zone? I'm going to take you guys down 19 to Key Vista, south of Darlington, north of Tarpon. So there's a big, huge community, Key Vista. I used to live in there. As a crow flies, they are very, very close to the Anclote. I was surprised that they were never in a high risk flood zone. They were never required to have flood insurance under the old flood system. They're still not what I'm going to call, and this might be where we talk to Delynn in a minute. What's happening again, I don't know what's going to happen with lenders and new purchases. I'm going to use that neighborhood only because I'm so familiar with it. But for people who did buy flood insurance policies for $400 a year, last year, the year before, 20 years ago, they are, I'm going to use the word grandfathered in to a preferred rate. So let's use $450 as what the preferred risk policy maximum premium used to be for $250,000 worth of coverage. During this glide path, because they're no longer considered an X zone, they're considered a longitude and latitude. That means their risk on that side of 19 has gone up. So I did a quote for, that was actually a realtor who was in live with us at Carrabba's a couple weeks ago, who is in Key Vista, and her brand new, if she was a brand new buyer in Key Vista and she elected to buy flood insurance, her premium is $1,250 versus the other people who had $450. So it didn't change. Again, nothing inherently changed. We didn't change flood zones. All we did was pulled up a longitude and latitude, proximity to the coast, and now we have a flood risk. Not a flood zone, but a flood risk. So the people who have $450 policies in Key Vista, good for you. You're going to be on a glide path over the next unknown number of years until you hit maximum flood rate for that house, no more than 18% a year. So let me explain that. Let me grab a calculator here. So if you're at $450 for the year, next year when you renew, you're going to renew with an $81 increase, because that's 18% of the $45. You're going to have that 18% a year increase until you get to that $1,250. So it's going to be a glide path for affordability. 18% a year is the congressional max until you hit full premium, which right now sitting at that same house is $1,250. On the flip side, if you were in, I'm going to say River Ridge, and you were going to be in a much lower risk because of the longitude and latitude, you get that at your renewal. So glide path is 18% over a period of years, but if you are to the positive, you get that reduction right away. So if you were paying a $2,700 a year premium and now it's $1,700, that happens at your renewal, and you now save $1,000 on that policy. So that is a very good positive benefit on that. So the glide path again is 18% until further notice. And if it's going to go down in premium, it's going to happen all on one renewal. Let me go back to my notes real quick, because I do know I missed. Oh yeah, let me talk about this. So this question, most of the realtors did know the answer to this in the Carrabba's meeting a couple weeks ago. Did you guys know that your flood insurance policy is the one and only policy that you can assign from a seller to a buyer? It is. So that is a very good thing with what's going on here. So if you have a seller who has a preferred premium versus what new business would be, you could strike a deal that your buyer gift that policy to the seller. Now, I'm not going to tell you how to do your business, but what they're doing is just what I said. They're gifting the policy, which means a policy is not being canceled, which means premiums are not being refunded to the seller. So if you guys make a side deal that you would owe me 200 days of a 365-day policy, if I signed it over to you, that's your business. But you can assign a flood insurance policy to a buyer, and all they're doing is signing over their rights to refunds, et cetera. Has to be done before closing. So if you are in a situation that you're on the cusp of a buyer getting a higher premium than what the seller has, rather than lose a sale, maybe talk to the buyer's agent and see if you guys can't make a side deal on something like that. So that is a very, it's a good piece of information to know if you did not know that. Obviously, homeowners insurance and other policies, liability cannot be gifted, but flood insurance policies can be assigned to buyers to the benefit. Same thing, once they get it, they might go on the glide path to the increased premium. Well, they will go on the glide path to the increased premium, but they're not going to be hitting it right at closing. So again, if you had somebody that's at, say, a $1,700 premium now, maybe in Viva Villas, and I quote them in new business is $4,000, there's a good chance possibly that deal might walk away. But if you could gift that $1,700 premium, it would take years and years and years for your buyer to get up to that $4,000 premium or whatever that known premium is going to be. Second. Okay, I have one more thing to go over, but while I am looking for that, I will tell you, long before I was in sales, my dad, when I bought my first house, my dad said, you know, having flood insurance is just the cost of doing business in Florida. It is. If you have an F on your driver's license for Florida, you're in a flood zone, because everybody in Florida is in a flood zone to some degree. It's just what is, you know, again, the one in 100-year flood. What happened in Texas yesterday and the day before, I don't know if you guys saw this, but their 5 or 8 or 10 or 12 inches that they've got of rain was an actually 1 in 1,000 year event. So things are changing. So even if you're paying, you know, 200 years for flood and what would have been an X zone, flood insurance is just priceless right now, is as far as I can say. The other thing, well, actually, no, I'm not going to talk about that. So basically, I'm going to open it up to questions. There was a question about commercial master association policies, but I didn't quite understand. I think it was Jim that asked that question. I wanted to address that because that came in early.
Carolyn, I was going to say there's a few questions in the chat.
Okay. Do you want me to stop sharing my screen so I can read them, or do you want me to read? Or do you?
Yeah, you can stop sharing your screen.
Okay.
That'd be fine.
Okay, hold on. Easier said than done. Hold on. Okie dokie. All right.
There you are.
So, Lori, so in Key Vista, the flood policy could be assigned from the seller who's paying $450 to the buyer. Absolutely. That would be the best case scenario for them. Heather, just lost a deal because the seller's policy would not transfer. Is that company specific? And probably if it was not a FEMA NFIP policy, if it was a private market, which that's what I wanted to refer back to, a private market flood insurance policy. So the FEMA NFIP policies are transferable. If it's a private flood market, there's a good chance that was not going to be transferable. Let me explain the difference. Until about 2 or 3 years ago, we only had the federal government's flood insurance policies. And again, I don't know what 2 or 3 years means with COVID. That could have been 5 years ago. Who knows? So a few years ago, there was a couple of things that happened. One is you could endorse onto your homeowners policies, not Citizens, under certain policies, and you could add flood insurance coverage. Security First was doing that. Edison, Florida Peninsula were endorsing flood. And we worked with mortgage companies to make sure they were going to accept those. That took a little bit of time to make sure they understood that was at least as good as an NFIP policy, if not more. Now, in the last couple of years, there's been some private market floods. AON is one, and National General, which is actually owned by Allstate, is another. Those policies have some differences than the NFIP policies. They are not better or worse than, they are simply just a different rating system. And for clarifying that, there's a good chance that that was probably one of those private market flood situations, or it was a policy that had a flood endorsement to it that probably was no longer open in whatever zip code. But Heather, if you want to email me later, I'd be happy to look at it and really answer your question a little bit more thoroughly. I heard condo boards are having a problem getting insurance for a condo complex. They shouldn't be. Everything's available for a price. So I can look at, if you're on the board there or want me to look at that condo, I insure quite a few of master associations in Pasco County. So I'm familiar with what they call RCVAP, residential condo commercial. How do you look up a home's risk level if it's not based on the flood zone? Oh my God. So that is a fantastic question. So you can't. You can't. So what I'm telling people is if you've been in Pasco County, Pinellas County, Tampa Bay market in a while, hopefully you have a general sense of where the higher than average flood issues are. I am happy to work with your buyers to see what the rate is going to be. And I say this in love and kindness, but I can't quote every risk that you guys have to do it. But as you guys, get serious, because we do like to work with your buyers, we can look it up. If you see and I don't know when Mike Wells is ever going to update his system, because I'm sure that takes an IT guy 6 ways to Sunday. But if you look at it and it's going to be a level X or a flood zone X still on that, it's probably still going to be what I'm going to say is an affordable premium. It's the A's and AEs that are going to be on the west side of 19 that are probably, you're going to see a higher, if it's an A or AE zone, they're still showing on public records, it's going to probably be lower than average. So, but there is no way to just otherwise just plug into, because you have to have a system like mine to be able to get it quoted.
So I would say, Carolyn, and correct me if I'm wrong, I would say that perhaps if our agents are out there getting a listing, probably one of the first questions is to ask your seller, can I have a copy of your flood policy?
Absolutely.
If they have, flood, and they don't even have to be in a flood zone to have it, as I said earlier. So if they have one, get a copy of it.
Absolutely.
So that you can run by it. And then also if they don't have flood, because sometimes if people's homes are paid off or whatever, they're not required to have flood insurance, so they won't. Maybe they can then at the very least reach out to you and find out am I in trouble here.
Yeah, absolutely. I'm happy to do it for you guys. It's just got, and I say this, like I said, it's just every time you go out to look at a listing, if you don't have it or whatever, that would be statistically impossible for me. But like I said, if you get the listing or you get the buyer who's narrowed it down to 2 houses and you want the flood quotes, by all means, I'm happy to do it when you guys are when you're really getting close to getting a contract.
Rachel kind of has a follow-up there. You're really looking at proximity to the ocean, river, etc.
Right.
So that kind of brings up, down the street from where our office is, Seven Springs, Veterans Village area. So there's a lot of those little canals that kind of run behind those homes and everything. Oh yeah, and ponds. Good point, Heather. So those could be less than what they are now then, huh? Yes.
Yeah, they could be, absolutely. Really, I'm gonna go out on a limb because I'm sometimes good at this. I think the tidal water is going to be the biggest issue with the increase in premiums. I think if you're on a lake or you're on a lower lying area of Beacon Woods that's like inland a little bit, I don't think you're gonna experience anything but a positive result as this. Because when I heard 96% of the people were gonna experience rate positive changes, I was like, wait, what? So I was happy to hear that for sure. Yeah.
Nice.
Which just means someone else is paying for those reductions.
The guys are sitting at base level over on the west side of 19.
Yes.
So yeah.
Which is always the case. So I just want to, and I know Delyn, you'll probably chime in on this, but the private sector flood is acceptable in lending world with the exception of government loans. If you have a government loan, they do require FEMA.
That's correct. I forgot to mention that. Thanks, Barry. Yeah.
So we're talking FHA, VA, that you all are starting to see again. Welcome back to our government loans. They must be FEMA policy. So just a reminder, but for your conventional buyers, if the flood insurance in the private sector is a better option for them, certainly look at it. But I think that when you list a property now, the first thing you want to do is maybe get a copy of their policy, just a suggestion, and compare it to what they could get to what it is now, to see if it'll help you make sense to market that property that way if your seller's willing to work with them. It's really no risk to, correct me if I'm wrong, Klein, but it's no risk to that seller to transfer that policy, is it?
In my world, there's not. It's just a matter of that somebody's not getting a refund. That has to be, if that's an issue, that you guys have to do that at closing or some other side gig. But
and if it's a finance deal, it probably can't show on the settlement statement. So it's probably something you'll have to work out outside of closing, but I don't know for sure. Maybe it could be. That's a title.
Go, Dylan, were you going to say something?
Well, like Heather said that one of her, I just scrolled back up, you know, she lost a deal because the seller's flood insurance company wouldn't allow it to transfer. But it's definitely a good idea to get a copy of that and call them and see if they will allow a transfer or not.
But does FEMA always allow a transfer, Carolyn?
Yes, as long as it's not what they call a repetitive loss policy, which is a story for a whole nother day.
Okay, that's a whole nother show, huh?
Yeah.
Okay.
Yeah. I did want to tell you a story about longitude and latitude. So I live on the sponge docks, and I can say that almost like I live on the sponge dock. I could throw a football from my house to Hella's restaurant. So I am on the sponge docks. I am in an old-fashioned X zone. There is a line right on my street, because most of Tarpon right there is in a flood zone. I happen to have been in an X, good for me. My neighbor, there's 9 houses in my neighborhood. My neighbor the other day wanted to buy flood insurance. And I said, sure, it'll be $450 a year because that's what I pay. So longitude and latitude, I quoted him $5,300 for what was formerly known as an X zone, because now we are longitude and latitude. So that's a big deal. I don't know, again, Dylan, if that'll ever change with what's going to be required or not, and how whatever letters, flood maps you guys are using on the back end or whatever. But yeah, so where I live, if he was going to buy a policy now, that's his rate that he would be, where I'm stuck at $450 until further notice. So yeah. I guess the days of searching for homes that are not in a flood zone is over, LOL. Yeah, everybody's in a flood zone to some degree. And then Lori says, I didn't think you got a refund on a flood policy. That was for a year, ? Okay, so that's a little different. You can cancel FEMA flood for like 4 different reasons. One is you sell your house, the house burns to the ground, your mortgage no longer requires flood insurance, and I forgot the 4th reason right off the bat. You can't just call and say, I don't want a flood insurance policy anymore. Even if you don't have a mortgage, you cannot midterm cancel FEMA flood unless it's one of those 4 reasons. So if you're looking at that, that may have been a situation other than the sale of a home on that one. But so then Heather said, or goes back to the question, I guess the days of searching for homes in not a flood zone, but it wouldn't be mandatory. That's a Dylan, that's an underwriting question as far as what's mandatory or not is she's the boss of you.
For the most part, if it's, so for what it's worth, they haven't really kind of caught up with the whole longitude and latitude thing. They're still looking at zones and such. And that's why it comes down to, we're going to go by whatever the insurance says. So if Carolyn tells you, yes, you need flood insurance and this is what it's going to be, that's what we're going to use. again, if they have a mortgage, has to be covered. And as Barry said, yes, we do allow for unconventional loans for the private sector as well. But I do want to say, even if they are transferred, for what it's worth, even when the seller is transferring the policy, we do still need a year. So they're going to prorate that to make sure at the closing, we're collecting a year for that policy, just to be on the safe side. Now, again, when they go to do the escrow analysis, like every single lender does in the month of January, it all kind of comes out in the wash, so to speak. They're going to think they have too much money and they're going to send you money back, or they're going to think they don't have enough money and they're going to charge it again. So just keep that in mind. We're going to be prorating it and making the changes on this end.
Okay.
Rachel has one more question.
Yeah.
You can answer that, Lynn.
Hold on, let me read it real quick. Rachel says, so if it's an X zone, but longitude, latitude says flood, then it would be required by the lender. Again, that's a lender question. I'll give you a quote, because I don't see a zone anymore, but the lender, so the Army Corps of Engineers is still mapping. They're not going to stop what they're doing for a whole bunch of different reasons. Flood maps are going to be revised on a continuous basis. It helps for a lot of county issues and future building and stuff like that. So lenders are still going to be using flood maps. Like I said, I'm not sure what Delyn is saying as far as a zone goes. We talk similar language. We don't talk the same language. So would it be required by the lender? That just does go back to what the lenders.
Yeah. So we still pull flood certs. And if the flood cert says that it's in an X zone, we're not going to require it. Unless, again, something comes back on those flood certs, and I'm not sure when they're going to start reflecting things. And it does say that it would require flood insurance. Then that's what we're going to go by. That's what the lenders are all going by still, is what our flood cert says. And sometimes our flood cert differs from the insurance flood certs, from what Carolyn pulls. So, and most of the time, one of us will, we'll get on the phone and say, okay, how do we, and it's going to, Carolyn, usually the insurance people has a lot more updated information than ours do. So usually they win. We go by what they say.
All right, Lori says, I would be careful with a buyer expecting their flood insurance to be low because it's in an X zone. Then in the future, when the technology catches up, it could go up significantly, like Carolyn's neighbor. That could happen. Yep.
I would probably just have people get it, right?
Because the thing is, the people that have been in Key Vista for all of these years and bought it at the $400,
right,
it's going to take them 100 years, not really,
right,
whatever. It's going to take them a whole bunch of years to get caught up to, like I said, I've always had flood insurance, especially when I bought in Key Vista in 2002, because I could see the writing on the wall that neighborhood was, it's a category 2 away from flooding. So, yeah.
Anything like west of 19, I would just buy it,
Is there a cap? I'm assuming Karen P, is there a cap? The answer to that is, if you're asking what is going to be the cap, the answer is until it gets to the final rate. So let's just say the rate in Key Vista that I quoted for the realtor last month was $1,250. It would go up 18% a year up until it got to that $1,250. But chances are in 10 years, when it finally catches up with that $1,250, it's going to be more than $1,250. It'll be maybe $1,400 or something. So the cap is, there's no cap.
So it'll just keep on going up, but yeah, and it'll probably never hit because, yeah.
Yep.
All right, got it. So the key is buy, just buy.
Buy it. Because, and again, some of the ones that were in an X zone, as we previously know it, that are in the lower than average thing, can now get it for like $200. Previously, if you bought a $250,000 policy with 125 in contents, it was a set amount in an X zone of $460, $450. But now those are $200. And especially if you get them from a private flood, it's peace of mind for $18 a month. So we do write through 3. We write through the FEMA National Flood Insurance and National General and the Aon, and they will vary by $1,000. I'll have one come in at $1,800, one's $3,500, and one's $4,000, and I can't tell the difference. I can just say this is the best premium for you, and I don't overanalyze it.
Great information, Carolyn.
Thank you, Barry.
Appreciate you getting this out to all our real estate professionals out there. They need to know this. they need to be able to educate their buyers and sellers. So it's very timely. And thanks for taking time out of your day to share this information. If you have questions for Carolyn, you can reach out to her directly. She's a wealth of information and always
Also-
has been. She's a true professional. So I would say that no matter what. Yes. Thank you again, Carolyn.